The U.S. economy is in a good place. The labor market remains strong. Economic activity is increasing at a moderate but sustainable pace. And the committee's baseline outlook is for a continuation of this performance in 2020. At present, PCE price inflation is running somewhat below the committee's 2% objective, but we project that under appropriate policy, inflation will gradually rise to our symmetric 2% objective. Although the unemployment rate is near a 50-year low, wages are rising broadly in line with underlying productivity growth and inflation. And importantly, we are not seeing any evidence to date that a strong labor market is putting excessive cost-push pressure on price inflation. Although the fundamentals supporting household consumption remained solid, over 2019, sluggish growth abroad and global developments more generally weighed on investment, exports, and manufacturing in the United States. Coming into this year, indications did suggest that headwinds to global growth had begun to abate and uncertainties around trade policy had diminished. However, risks to the outlook do remain. In particular, we are closely monitoring the emergence of the coronavirus, which is likely to have a noticeable impact on Chinese growth, at least in the first quarter of this year. The disruptions there could spill over to the rest of the global economy, but it is still too soon to even speculate about either the size or the persistence of these effects, or whether they will lead to a material change in the U.S. outlook.